Hey traders, Raghee here, and in this video we're going to discuss the daily time frame of December gold. So for those of you that do not play the underlying futures contract, and let's face it, this is something I want to bring up. This is not necessarily an initial margin that a lot of people want to have to swallow. I mean, it's a $10,230 initial margin. That's locking up a lot of capital, and that's just one contract. So the first thing I'm going to recommend is think about the micro gold contract, which is 1/10 the size. It's 1/10 the initial margin, 1/10 the point value, or the GLD options, buying options, or the options on GC. So again, a lot of you might go, well, Rog, that sounds great to play gold, but GC futures may not be in the cards. So what are the alternatives? Again, micro gold, options on the full-size GC contract of gold. The December expiration is fine, or go with GLD. So, and in the premium video, I'll talk a little bit more about the strikes and so forth on GLD, but let's talk about the trigger. That's really important. Let's talk about the actual price trigger to get any of those trades rolling. Now, when gold initially moved lower, and I'm talking about this day, we knew we might see a little bit more volatility, but quite frankly, this was a lot more volatility than I was suspecting we'd see. And so having made this low here, this puts where support is at under a lot of question marks for me. Big question mark as far as support. Worse, even though now we knew this low was sitting here, I really didn't feel that we were going to touch that low again. So rather than placing another limit order to take advantage of exhaustion, we shifted to a stop order to take advantage of the momentum. And that was in 1955. So a lot of you are long from our premium video conversations from that 1955 as a stop, a buy stop to get long with momentum. All right. Well, let's think about that level a little bit more again. If we happen to have a pullback, and I'm not going to rule that out, gold's been incredibly volatile, and we retouch 1955, I'll even say down to 1950, I would then be open to putting instead of a stop order to take advantage of momentum, now that same level is going to be valid with a limit order, once again, to take advantage of exhaustion. Now, this is going to be great for those of you that want to buy those options. If you're looking to take advantage of the options play, ideally, we have some bearish momentum down to that 1955 to 1951 zone. And with that, we can scoop up the GLD calls or the GC calls, because the way I look at it is when everyone is noticing the momentum going down, you're going to see puts are selling at a premium. When everyone is seeing that the momentum is higher, bullish, the calls are going to be selling at a premium. But when the market's moving lower, you can scoop in and get those calls at a deal. Now, another reason you might want to go with the idea of the options or the smaller contract sizes, take a look at the zone. The zone that I'm looking at is easily a $4,700 zone, and it extends to, as you can see here, almost $7,000 if you use that low that we punched down to. So regardless of the limitations you might see in terms of initial margin and so forth, I'm going to myself look for the calls for this particular setup. I'll be able to build a larger position with lower risk, and who doesn't like that? That's the way I'm going forward, and I'll see you in the next update.